Hello, this is the video about customize EBITDA report into your income statement. In this example, I'm going to focusing on USA localization and version 18. So this is a database that was already prepared. And you can see that if I'm going to reporting and profit and loss statement here, I would have the interest tax depreciation summarized for 3950, and EBITDA report itself, it's higher than the net profit by 3950. Okay, so let's take a look on the process. Our first step is to create a chart of accounts. Based on USA localization, we do not have the chart of accounts below, so we're going to create those. So you're going to accounting app, configuration, and chart of accounts. Now you're going to just click on new and then add the code, the account name, and the type. Now, if you take a look at 7, you will see that in my account code, start with 7, there's only 3. 7.1, there's only one account interest. 7.2 with tax. 7.3 with depreciation. So if I do have another account code 73100, then in these accounting reports, if I go to the report that is in profit and loss statement, you will see that in this account here, if I say 71 plus 72 plus 73, this is a prefix of the account code. So this 73 will be including 73000 and 73100, okay? But because there's only one 71 account, which is 71000, 72000, 73000. That's why 71 pointed to interest, tax, and depreciation accordingly. Okay, and then you're doing the process by adding a line. Expression is going to be balance, which is a label, computation engine, which is selecting the prefix, and then your formula. And this will be one line. I manually define the code ITDA. So that will be the process here, number 2. Number 3, we're gonna add an EBITDA. So it's in the same report, but we're gonna add another line. So I just add the line and I call it EBITDA, and the code is EBITDA. Again, the add line, it's called balance and expression, aggregate other formulas, NEP.balance plus ITDA.balance. What is NEP? NEP is the short code of net profit, so it's NEP.balance. Okay. Net profit itself comes from other revenue, other income, minus cost of goods sold, minus expense, minus other expense, right? These other expenses, for example, these other expenses actually mean by depreciation itself, because you can see the domain of account type is depreciation. But anyway, just depreciation itself is not enough, because my EBITDA is basically the net profit adding back, which is excluding the expense of interest, tax, and depreciation. If only depreciation is not enough, when I say excluding it, I have to add it back, because the net profit already deduct those expenses. So I have to add it back. Once the report is ready, you can go back to the profit and loss. You will see that my profit is 34899. My net profit is $18,449, which is the same as in this report here. The net profits on the top, and then my total income. Now my EBITDA, my interest, tax, and depreciation is 3950, even though the depreciation itself shows only 750. But then my EBITDA though will be higher than my net profit, because it's excluding those certain expense. So here's my report, the same report, and my EBITDA will be the net profit plus the expense, because I'm gonna exclude those expense. Okay, thank you for watching.